morning, Chris.
Hey, my friend. So nice to see you again. How are you?
I'm good. This is Brian Jones. I'm here with Chris Hood, pro trader, world's most interesting man. What's
Well, I'm
up?
just glad you're okay, man. How was your visit from COVID?
Father COVID paid me a little visit. Sucked pretty bad. I'm just trying to get through this last little bit. Kind of went away, got a flu. It kind of went away, kind of came back.
Oh
Now
man.
it's just in this kind of tapering phase. So we'll see.
Well, I think that your COVID and the market tend to have a chat because Father Christmas came, delivered some presents, and then promptly took them back. And I think he got COVID. So, it's been quite interesting the last couple of weeks. In fact, everything that we got given after Christmas was taken back in a matter of a week. So it's been pretty tumultuous, should we say. And it doesn't bode well for the year. So, you know, market looks, you've got to be a little bit more nimble now. And I suppose nimble doesn't happen when you got COVID. So you've got to
No,
be.
no, I took a little bit of a hit. I had a lot of technology exposure. So
Well, I think a lot of people did. So
yeah,
don't take it too bad. What you've got to think about is when people expose themselves to different sectors of the market, there was nothing wrong with the setups. Remember what caused the sort of the resetting, should we call it the resetting? It wasn't something that was structurally wrong with the technology stocks that people had gone into. Nothing wrong with that. Apple's still making money. Microsoft's still making money. It was all of that. It was the impression and the perception of how fast the Fed is going to raise interest rates. And the rise in interest rates was already baked into the numbers. So you have to make an assumption that at some point we're going to reach levels of oversold that there's going to be a bounce. I think there's going to be a bounce today. But you've got to keep the bigger picture in play. And it was something I thought about this morning, was how many people trade and invest at the same time. There are two different things. Trading is the ability to make money in the very short term from small movements in the stock, right? Or the option or whatever it is. But the investing is a much longer picture and a much bigger picture. And I think from an investment perspective, there's definitely going to be a shift. Most people who've started trading in the last maybe 8-9 years have never really experienced a down market or a rising interest rate environment. And that can be pretty challenging. Now, the thing is, people often assume rising interest rate stocks go down, and that's not always the case. So, it becomes a little bit more, you've got to be flexible. So if you had positions in Apple, I had positions in Apple, I had positions in semis, I had positions in Microsoft. Yeah, you take a little bit of heat, but you move on, right? It's like you can't blame yourself for something that gets caused from outside of your control. What you can blame yourself for is oversizing. And you can blame yourself for being a little bit too aggressive in terms of the strategies that you were using. But yeah, I think that we've got 50, what have we got left of the year? 51 weeks or, 53 weeks? No, there's 52 weeks in a year. So there's about 50 weeks left to make back what we lost this week. We'll make it. There'll be opportunities that will come right. And there are a couple we'll talk through about some of the tools and some of the things that you can do to make yourself a little bit more nimble as the market plays itself out. I think that we're going to get to a point where things are going to reverse, and then we go back to the other way. And I think we'll still make that 500 in February. I still think we can do it on the S&P, although I think 490 is probably a bit more accurate now, with a little bit of praise and a little bit of juice behind it and no COVID. I think that the market could probably get there. Let's have a look at a couple of things. I'm going to share my screen, and we can have a look at stuff. So a couple of things. If we look at the sectors, so much technical damage that was done over the last couple of weeks, and you can see it here on the far right hand side. When you see a lot of these below the 8 columns here, right? When you start seeing this red, even if we're in double green, all right, if we're below the 8s, it means that the short-term sentiment, the day-to-day sentiment is negative. And that can easily convert into below the 21. And when it gets below the 21 and below the 8, so in these sectors down here, biotech, communications, home builders, healthcare, all of these ones here that are suffering a little bit now. They're going to be harder to trade. And one of the key things you've got to be careful of is don't try and time the bottom. Okay, don't get it. A lot of retail traders try and say, that's it, enough is enough. I'm going to get on now. I'm going to pick the bottom now. And they start buying these out of the money, 30-day directional calls. And then all of a sudden the market sells off again. Those get wiped out. Now you've just lost again. So keep it in mind. Be above the 8, be above the 21, be in double green. All right. If we look at where that's the case now, we only have, where is it now? We used to have XLP was the only one the other day that was actually trading a little bit. It fell below the 8 from yesterday. We've got utilities and staples that are probably the only two that have potential, but there's nothing really worth trading. Down here, if you look at corn, corn's above the 8, but we're not in double green, but that's okay. We could probably live with that. So there's not much to go on right now. So what do? You've got to now become a lot more nimble. So what we do is we shorten our time frames. We go from the outside back to the inside, right? So a couple of things. So here's SPY. This is the 3-minute chart. This is from yesterday. I put some notes on here just so that we could have a chat. So what you see, it's a bit small. Let me make this graph a little bigger. Okay, so if we look over here, this was the open yesterday morning at 9:30, big gap down. We go into a double red band, which means our volatility on 2 time frames, intraday time frames, is negative. You don't want to be trading in that if you want to go long, right? First symbol of long was when we got that crossover on our new trend oscillator down here on that red candle. But because we were double red, we can't trade that, right? One of my trade rules is I can't trade in a double red. So here, when we started to have this reversal where we crossed over our trend line, this red line is our trend line. We crossed over there. You can see we've got a long signal. We still double red. We had to wait. There was our momentum shift. And you can see at the back on our shorter duration volatility band started to go green. So we go long in that trade. And here we go on the long trigger, change in the vol band. We had a reversal signal. We buy our option and we hold it. And here we had a close signal, but we didn't close it because we still double green, right? We don't close if we're in a double green. We only close if we're in a red. Now we went into a red, but we had a reversal signal. So there's no need to close this trade because we were still trading on the trend line. Carried on. We were above the trend line for the whole day. Around about 3 o'clock, we closed it when we broke down below the trend line over here. When we get that, we went, so we get the exit signal, we close over here. A couple minutes later, we went into a double red. We don't want to be double red. As soon as we shift back into double green, we bought some more shares and we bought another option and we got the move to the upside. So the thing is, you've got to watch the charts. You can't trade randomly, all right? This is why I don't like the noise in the market, right? Whenever you've got other people telling you when to trade, how to trade, all of that stuff. It's very distracting. So this is the setup that we're trading at the moment is we just use the 3-minute chart. We've got some long calls on SPY and we've got a forecast in price. And this is towards the end of the week. And you can see this is the predicted price movement we're expecting on the S&P up until the end of the week. All right. This is till the 14th up to here. So as long as SPY trends in that direction, all right, as long as it trends in that direction and stays in there, I'm going to stay in my option because now I've got time on my side. I've bought a further dated, I've got a February 18, 480 call. I've got loads of time on my side. Now, how do we make sure that we're trading in trend? There's a simple tool that you can use called a regression trend. All right. And all I'm going to do is I'm going to take the bottom where we had the bottom and I'm going to go through to this channel there. Now, what that does is it creates the same, it's a similar thing to the Keltner channel, but now it's trending. All right. Now we're in a upward line. This is a 2 standard deviation channel trend. So let me just double check that it's a 2. Okay. So from here, this is a 3. So I'm just going to change that now into a 2 to keep it a little bit more narrow. So what happens is, as long as I stay inside this line on both sides, trending in the right direction, I'm going to be okay with the trade. So when you start building your tools and when you start actually looking to trade, this is a much safer way of trading than trying to call the bottom on something or trying to take a directional play. You've just got to have the right setup. You've got to have the right information. You have to have the right tools to help you make those decisions. Don't fall into the trap of trying to be more knowledgeable than what the market is, right? You can't predict what the market's going to do. We have Jerome testifying that they are going to do whatever it takes to make sure inflation doesn't become entrenched. Okay, he also said inflation was transitory, and then he backed that out, a couple of weeks later. And, he kiboshed a lot of people's RSP, 401ks, by, chopping and changing his opinion. So you've got to be careful about looking at that noise. Keep yourself focused, trade the trend. If we get a pullback today and, it pulls back to the mean, I'm going to add some more calls and I'm going to keep trading this as long as it stays inside this trend. When it breaks and falls outside the trend, that's when we, oh, excuse me. Oh, hay fever. Oh my gosh, I apologize. Oh, I really enjoy sneezing. I have to tell you though, sneezing is probably one of the best physical activities you can do. So here's the trend. You've just got to trade the trend. And if you've got the channel and you've got the charts and you've got your indicators, what we look for are a couple of things. If you look down at the bottom here, you'll see these little white crosses over here. You'll see this little green cross over here. Whenever we see this green cross, this is a very interesting indicator actually that I built. It looks at two different types of moving averages, and it's the relationship between these two moving averages. They're calculated a little differently. There's a little bit of math that we put into it. And when you combine the strength of this as an early warning indicator, so you see that little blue candle that we had over here, you can use this as a trigger to go long on your trend. So that would have been a great buying opportunity. And then our indicator for our reversal indicated over here, that was another buying opportunity. So it's not just where I've bought, that there are other ways of, having triggers to add into your trades. We could use these plus signs that we have here in the squeeze. We could use this white triangle that sits here in the squeeze. We can use this green triangle down here. We can use anything really, but you've just got to have a plan. So me personally, I trade my buy now signals. I always look for the buy nows and the breaks. I look for candles. I look for my little volume dots. So when we see green candles with a purple dot, it means this momentum is improving and we've got an increase in volume. So when we have those situations, we know that we're going to have a successful trade. And this type of methodology can be used on any time frame. You can do it on the day chart. You can do it on the weekly. You can do it on the 4-hour. The key thing is being consistent, number one. And number two, making sure that you've got a plan. So when you get the trigger, what are you going to do? Like which option are you going to make, right? Which one? Are you going to buy the at the money? Are you going to buy an 80 delta, a 60 delta? So what I tend to do is when we trade in choppy environments, I tend to buy the more expensive 80 delta option. And people would say to me, why don't you just buy the stock? Well, because the stock's really expensive. And an 80 delta for me is a much cheaper option to buy if I am wrong. So remember, I'm buying deep in the money option on the call side, 80 delta, because if the stock just tracks and just goes straight, I'm only going to lose a small percentage on that option at expiry if the stock doesn't do anything. So I try and keep my risk down. It does make my trade slightly more aggressive, but I have a higher probability of winning. So in your short duration trades, your 3-minute, your 1-minute, your 5-minute, this is the way I find works for me. I find the tools that I've got also work for me. So here, if you look at the bottom, you'll see a number of strategies that we have. I'm just going to add one more here. Let's just add on the other tool. So when we use our MA tool, so this is a tool that's based on moving averages. Right, so a lot of people trade moving averages on their stocks. The problem is with a lot of moving averages and the way that they are calculated, they might not always work the same. So what we have now is 3 tools. I've got 3 tools that are sitting here. I've got an intraday tool, I've got a squeeze tool, and I've got my MA tool. I'm just going to look at my MA tool, right? So here on the MAs, we can set this up in such a way for it to tell us, you know what, when the 8 crosses the 13, just give me a signal. Tell me that this thing is going to give me a signal. So from here, I'm just waiting for it to calculate. So here, you see where it says strategy entry, these green things. You see how it overlaps with my reversal signal? I could have been trading 1 and exit, 1 and then an add, exit, now an add, right? So you see how they all confluence, they all sort of agree and sort of congregate together. When you've got a trade plan that lands up having signals all coming at the same conclusion at the same time from different angles, you have a much stronger trade strategy. So this is just something that we do, you know, we switch around between our different tools. We know that when these signals start to trigger, how successful they're going to be as well. So knowing when this squeeze signal triggers, I know that I'm going to have a high win rate with the potentially, you know, decent profit attached to it. And those would trigger extra adds into my trade, etc., etc. So those are just a couple of the tools that we use for intraday, right? Let's have a look at a couple of trade setups that we've got on the go at the moment that might be of use to some guys. So here we have Zscaler. This was a trade that we did. We traded Zscaler fairly well last year, but there's some interesting things here. So the first thing is massive, decline that we had here starting on the 3rd, dropping down below the 21. But look what's happened here. So if you look closely, you see how this band, this volatility band here has gone from red to green. So we had the shift in the background in terms of the volatility trend. We broke back above the 21. We've got a momentum reversal in terms of the green triangle. We had a buy signal here on a divergent low bar, which indicates for us within 3 to 5 bars, a higher price. So it was double red. We had a buy signal here. We can't go into this trade because we're double red. So we have to wait for it to go green. So there it goes green. And at the same time, look what happened. We got a buy signal down at the bottom. We had a momentum reversal all happening within 3 bars. So this is hourly, right? So we got that at 10:30. We got the change over at 12:30. We got the momentum at 2:30, and we had the green bar at 3:30. So if you look at it, within 3 to 4 hours, we had all of these buy signals starting to load up into the trade. So we go in, we've done a funded trade. So we've got a call debit spread funded by a put credit spread. That makes it a very cheap trade. All right, but I can win on 2 fronts, and these are expirations, right? So I'm going to get this premium decay on the on the put credit spread. That's going to pay debit spread. We then take our ghost feed. So here's our ghost feed, and we just take it to the expected move. There's the expected move. By the expiration of our call debit spread, okay, we're expecting Zscaler to be trading somewhere up here at 313. This is not numbers that we make up. This is numbers as defined in the options market. So we just look at the expected move, we add it on when we make our trade, and we draw a fractal forecast that goes up into that price point. So we know we've got a trend that we're setting. Now we're looking at, well, where's this trade going to open? If the trade opens above this yellow tinged area, this is our put credit spread. So as long as it's above this yellow tinged area at expiration, that put credit spread is going to be a 100% winner. That then pays for 50% of the cost of our call debit spread that we're going to hold now until 18th of February. So when you trade, always try and look for an agreement of signals. I don't like trading off one, okay? I find that trading off one, you become a victim of the trade success, all right? So when I have my squeeze, if my squeeze triggers today, let's say, and I've got a squeeze that's forming here already, if this squeeze signal prints, I know that I've got a 77% chance of winning on that trade. And I've got a fairly high profit factor. This is a phenomenal profit factor. But I know just from my data, this squeeze situation that I've built here does not trade very often. So if it does trade and it does trigger, I need to be conscious of the duration of the trade. So I can't look at it and go, I'm going to trade it for the next 3 hours. This is going to take 154 hours on average to play out. So 154 divided by 8 is 19 days. So I know when that squeeze signal prints on my screen, I have to do a trade that's a minimum of 21 days. So it's got to be a minimum of that. I have to have a little bit of time to get this right. So if I've got 154 hours of the trade, I need to then decide up front, when I get that squeeze signal, what am I going to do? Am I going to do a put credit spread? Am I going to do a call debit spread? Am I going to do a butterfly? Am I going to do a long call? Because when the squeeze signal fires, you have to act. That's not the time to go into the trade and go, okay, what am I going to do? Because that whole process takes a little bit of time. And if you've got 10, 12, 14 of these all buzzing at the same time, you become very distracted. So a couple of things you could do. You can write down on the chart just by using a simple text note. If you use a call out, where is it? There it is. You could put a little call out there and you could say, okay, what did we do? We did a funded trade via a call spread and a put debit spread. All right. So a put credit spread. Okay. So now we put in one of our notes, and what we can do is we can write here, when the squeeze fires, look, let's say, look to add a long call at 60 delta plus 60 days. Okay, so now we said, okay, what I'm going to do is when that squeeze fires long, when I get that signal, I'm going to add a 60 delta call option, 60 days for expiration, minimum. All right, so now I've got my plan. Now I just sit and wait. I can just set my alert. I can go into this thing here. I can say, okay, when this alert comes, check for trade on ZS. Done. Now it's all set up. As soon as that thing buzzes and I click on it, it will open up this chart and it will tell me exactly what I said I was going to do. I then go off and I trade it. Now, that's a really important way of planning. And it's a very, very helpful way of minimizing your emotional connection to trading. You know, what you want to do is not get sucked up into the daily movement that happens. You don't want to have, oh, you know, the market, you know, if the market drops, let's say, you know, here, I've got my day trading chart here for the S&P. Let's say the put call ratio is suddenly spiking into these, you know, the stratosphere, and the ticks are all negative, and, you know, volatility is breaking through the clouds. But we're trading this on a really short time frame. You don't want to get sucked up into that and let it affect a trade that's actually a great setup. You don't want to do that. So you've got to make sure that you compartmentalize everything that's going to be traded, which is why planning up front allows you to create those boxes. If you're just sitting here going, okay, Mr. Market, hit me with what you have, it's going to be a very, very difficult time, because you're going to be going from here to here to here to here. Inevitably, something gets messed up. So it's just a way of making sure that you stay consistent with your plan. Use the tools. A lot of the tools that I use are free. A lot of the tools, you know, I've built a lot of these tools myself as well. So, you know, the key thing is to make sure that you've got something that works for you. Too many traders try and copy other traders. You know, that's a big no-no. You know, copying another trader is not an easy thing at all. So you've got to find what works for you.
What sort of trading? You said shorter duration, intraday trading is best in this choppy environment, do you think?
I find the 1, 3, and 5 charts on the SPY the easiest to trade. All right, it's easy. I personally don't really like trading things like Tesla or Apple or Microsoft on an intraday basis, because there's too many things that happen outside of the stock or outside of the price that can affect the price. When you trade an index, you've got this, you're sort of trading generalities as opposed to specifics. So 1, 3, and 5 for me tends to work. You know, there are some traders who are incredibly successful, who trade the 15-minute chart by itself. So if you trade just the 15-minute, where is it? Here. So this is the 15-minute chart. I will trade this as well. There are a couple of things that you've got to always make sure. If I trade the 15-minute chart, I want to make sure that the indexes are always in alignment, right? So if you look now on the right-hand side of the screen, you'll see the four futures, the indexes, right? So we've got the Russell, the S&P 500, we've got the NASDAQ, and we've got the Dow. If you notice, all of them red, 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 and red. Okay, all of them are red right now. If all the indexes on the same time frame are moving down, how can you go long? You can't go long, right? The whole market is moving down and you want to go counter to the market. So if I open up, let's say, SPX, which is what I would normally trade if I was doing same-day expirations, I would trade this. I can't trade this graph, and this is a 15-minute graph, so there's no pre-market here. I can't trade this positively if all of these are negative. You know, it just, you know, why would you do that? You've got to wait for all of these to be in alignment. And there are times when they are in alignment. For most of yesterday, you had the Russell green, you had the S&P. Oh, this is the overnight. So let's go here. When you look at yesterday, you know, you had this period here of green. You had the period here of green yesterday. There are times when all of these things align. So usually first 15 minutes of the day, I will look for these indexes to be in agreement. When they're in agreement, if that can happen before 10:30 in the morning, there's a trade setup that we do. It's called the clearing range. So we'll do the clearing range trade setup. If they are not in alignment, we will wait. You know, you'll see these buffers, these blue dots here, right? So one of the things that we've built into our toolkit for our intraday trading is you only really want to trade to the upside when your buffer zone is giving you the go ahead, which means it's gone pink, right? So when these dots are pink, you can go long. So you'll see a couple of trades there. You'll see this blue arrow at the back here. It's covered by that trade there. We've got green, green, green. We had 3 buy signals yesterday to accumulate positions during the day to continue to trade the 15-minute chart. So everything is set up to trade this on a slightly different time frame. So what would I be doing? I'd be buying in on the 15-minute and trading it the next day, and I'll keep holding it. So every time you trade, you've got to make sure that you've got your time frame. What are you going to buy? What are you going to sell? Where are you going to sell it? What are the triggers? And then you wait. A lot of this is about patience. It's about sitting on your hands and waiting for what you've said you're going to do to happen. A lot of people try and force things. They like get up in the morning. They're like, okay, I'm going to trade today. And then it's a matter of finding what you're going to do. I'm like the opposite. I'm like, I get up in the morning and I go, I don't really know if I want to trade. If I go and look at the market and I go red and it goes red, 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 and I feel like I'm going to be doing short trades today, I turn on all my strategy tools that tell me trading to the downside. And then I wait and I just switch it around and go and buy puts on the triggers. I don't mentally have to sit in my trades and go, okay, what am I going to do? Like none of that. I'll plan the night before. If the futures do this, I do this. If it does this, I do that. And that's what makes it so much easier. So the tools help you. I mean, a lot of people tend to think that, you know, you can become an indicator junkie when it comes to trading. And it's true. I mean, I was like that. I would buy every single thing that came out. You know, have you seen these Facebook ads where those guys are like, this is the only thing you need? I mean, it's like, I don't know. And then you trade it.
Everything is the only thing.
What's that?
Everything is the only thing you need.
Oh, yeah. And it's like you trade it and then you lose money. And it's like, okay, well, either I'm wrong or the indicator's wrong. And most traders will go, I'm wrong. They don't realize the indicator was wrong or the indicator was the wrong thing for the wrong stock, right? So this is a huge piece of why I built this tool is when you have an assumption that something can be the same for everything, you're immediately making an assumption that they're going to be wrong. Because there are 8,000 stocks in the market. And, you know, I'll show you an example. If we pull up this one here, ACN, right? If you look at the bottom, I've got my various tools on here, right? I've got my squeeze tool and I've got my MA tool. If I look at my MA tool, I'm looking for a signal. I'm looking for strategy entry, right? You see there, it took me in there, it took me out here. Perfect trade, okay? And that was based on a 9-14-21 reversal with a slingshot, okay? Using a 3 ATR baseline. So using our baseline for volatility, I'm looking for that signal, right? But I know when that signal happens, I've got a very low win rate. I still need to manage this trade. I can't just go into it and say, oh, you know what, it's going to win. The fact that it won here is not necessarily the point. The point is there's a signal that's working off this entry condition, and this is what it does historically. This is since 2020. Oh, sorry, let me do the 2020. So since 2020, this signal, this reversal signal, let's have a look and see. It's generated wins 33 times, and you would have just barely broken even if you'd followed that strategy by itself. That does not mean that when you saw the signal, you were going to lose, because you'd still have to manage this trade, right? If we look down here, you can see the histogram of the squeeze. It's about to cross over here. We also had a supportive buy signal over here on that blue candle. So this would have been a winning trade. Okay, now we look over here. We've got a blue candle. We've got a green bar, a green arrow down at the bottom here for our trend oscillator. And my squeeze, I've got no squeeze. Can I trade this? This would be the question that would be asked now. Can I trade this? Because if I've got a plan that says, okay, I can trade that, well, what am I going to do? Am I going to trade this with the assumption that it's going to hit my trend line and fall down? Is it going to hit my trend line and go up? I don't know. I don't have a strategy signal here. All I have is a bar. So let's switch it now. We'll go to our squeeze tool. Now with the squeeze, I don't have a squeeze signal either, because there isn't one. There's no compression on price. Okay, we only have a momentum reading here. So what we do is we switch this around and we go, okay, what type of entry am I looking for? Right now, I'm only using the momentum bars for entry. If I take that off and I open it up to just look for the squeeze, I'm just looking to see where the squeeze signals have triggered trades. I've had nothing. I've had nothing since 2020. So from here, we would then move this around a little bit and we select variations of our squeeze elements. So we've got our squeeze pro, which is this histogram. We've got a stochastic, which is like overbought, oversold. We've got volume. So we look at volume inside a squeeze. We've got the wave score, which is, this is giving us a numerical number of the probability of the squeeze firing to the upside. So I could say, okay, I'm looking for the squeeze for a histogram crossover. Okay. And I'm looking for the B score, our B score to be above 50. Have we had any of those situations in the last 2 years? None. And we can move forward. We can go, okay, I'm just looking at a standard overbought, oversold RSI. Let's have a look and see if we've had any situations in the past. There we go. So the standard RSI, overbought, oversold over a 5-period calculation, has a 46% win rate on the stock, barely breaking even. You would have entered here. Oh, sorry, you would have entered, where is it saying long? There's your exit and your entry somewhere down here. My eyes aren't working today. Long exit. It would have been somewhere there. Anyway, yeah, there. You would have bought and sold literally one day after another, right? So we are waiting. If we are waiting for that signal to appear again, we have to accept that this is the risk, right? But I can wait. I don't need to be pressure myself into doing this trade. If this is what I want to do, then, I'm going to wait for it to happen. I'm just going to take off these signals here off the calculation. You see what happens? If I use the squeeze signals, which are specific coding elements into the squeeze. So it's looking for the most optimum place to go and buy or enter a trade. If I turn it on, you see how it improves the numbers? If I turn it off and just use the RSI, you see my win rate and how low it is? This is why standard indicators by themselves sometimes are not useful indicators for entries. They shouldn't trigger entries. So we can prove that. If we turn off our ATR baseline and just see exactly, you see what happened here now? If I turn off my volatility control, I had a 40% win rate and I barely made some money. But look how many trades I would have to do. You see how frequently this is trading? So as a trader, you're trading the 1 hour chart. You want to do that? You're going to be going in, out, in, out, in, out to make a 15% profit at the end of the year. I'm not so sure that that's an optimum use of anyone's time, right? So from here, we can switch this up. We can change these features within the tool. And we can actually see now, okay, now just using the squeeze signals by themselves, look at how my win rate went up and how infrequently I traded. So now I can improve this. I can say, okay, I want to just use my momentum bar. So I'm using the squeeze signals with the color change in the bars. You see what happens? I'm now 40% profitable. So I want to trade the signal that's going to give me the least amount of work with the best result. That's my objective. I do not want to trade 9 million trades. I want to trade as infrequently as I can to be as profitable as I can be. That's my objective. But I also want the signal to generate effective signals, right? So I'm looking for a profit percentage above, or win rate above 50, profit factor above 1.2. And as you go through the tool, you can add and detract, add and subtract different features and different elements to see if you can enhance your trades. You see how some of these don't work together on this particular stock, but they may work together on other stocks, right? So what there we go, look at that. So now when I add a shift in volume, okay, so an increase in volume during the squeeze, together with my squeeze entry signals, together with my momentum bars, I have an effective trade plan. I'm not going to be trading too often. This is the hourly chart. The average signal is going to be valid for 123 hours. So if I'm going to trade that signal, 123 divided by 8 is 15 days. So here on this trade, I could do a sub 15-day bull put spread. Okay, but I'd have to use my Keltner channels just to determine where my levels are. So I can't do my put spread until I hit the 21. So I've got to be above this green, this dark line here. So once I get past this gray line, if it gets above that line, now it's starting to move this way, and I've got positivity down here, and the squeeze fires, I have a put spread set up. So what you do is you plan this all up front, right? So we start off with the stock. So let's say you have a watch list. Let's switch this up. Let's say we have a watch list and we want to look at Google. That's one of my favorite trades. So Google, here we can see Google on the hourly chart. Let's switch it to the day for a second. So here on the day chart, you can see Google sitting right at the bottom of a 3 Keltner move, right? It's already sitting at 3 ATR, okay? No squeeze, downward trend momentum, moving that way. I really want a setup on Google. I'm looking for Google to give me a signal at some point telling me, okay, it's safe to trade. All right. You can see this zone of support, this green band. You see how it hit there, went through, and it closed right on the top of the band. So right now, Google needs to go that way. So let's build a trade. Don't worry about that. We'll I prefer doing this right now. So let's see. Okay. So if we you see how I'm getting all my signals coming now? So there's all these trades coming up. So when we look through Google and we want to build an alert for Google, we go, okay, well, what do we like trading on Google? So let's take off a couple of these factors. So if we just trade the squeeze by itself, and we're going to use a histogram this time, we're going to use the change in color on the histogram. Okay, so when momentum starts to slow down to the downside, and we've got these little plus signals, you can see that Google, 66% win rate, 11% profit factor. That's huge. Or 11 times profit factor. That's enormous. But look where that signal ended, right? That signal ended there, right? So we were long here, we got out there, now we're waiting. Okay, so now we're waiting for this signal to reappear. Is this a signal you would want to trade? If you knew that when that signal happened, that you could trade, you would want to trade Google, right? So we go in, let's go here. So I'm going to add in an alert here, Google put spread. So now I know that when I get that message that Google's now met those conditions and I have a squeeze, it's not going to fire too often. Here you can see 9 times over the last 2 years. It's a really infrequent trade, but it's very profitable when it happens. Let's go in and have a look at another one. So we can open this up. We go, okay, is that the best trade that we can find on Google? Let's have a look. Let's turn that off. Let's add our momentum and see what happens. So 66 and 11 was the key. Let's have a look at this one. 75 and 5. Right, so now we're getting better win rates, but lower profit. Okay, and less frequent trades. So when these signals start to happen and you get less frequent trades, if they've got high numbers, what you would be doing is sizing your trade a little differently than you would do it if you were trading on a shorter duration chart. And this is the beauty of planning, is you've got your list of stocks you want to trade. You know, the list is easy to compile, right? You just need to look at the top 10, top 20 stocks of the market. Tesla, Microsoft, Apple, Google, Netflix, you know, Twitter, Facebook. Okay, obviously they're more tech, but those are the big companies. That's where volatility is going to be. Set your alerts, walk away, go watch some TV. You know, there's other things to do. And then when you get back, remember, you're trading a day chart. What that means is these signals are only going to print at the end of the day. So your work is really going to be the next day. So if I got the signal today or at the end of today, tomorrow I would do the trade and so on, right? And that slows things down. That's what you want when you're trading. You want to slow things down so that you've got the best setups, the best trading, best results. That's how it works. And those are the tools that we have. You know, these are available to people. So it's just a question of understanding how each indicator works relative to each other. You know, I don't like trading single indicator strategies. They can be unreliable. But when I can do something where I can add from here and I can add the features of this one, you know, then you have an opportunity. Here we have XLP. This was a trade we were going to talk about today, right? So here we have, I've put in my little notes. Those were the entries that we were trading off. Look here, we've got these signals here. This strategy, 60% win rate, 3.7. Only 5 triggers in 2 years. I want to trade that. Here you can see XLP staying in the channel. As long as it's trading in the channel towards this price point, I'm in the trade. So I'm already in this trade. You know, and there's an opportunity for me now to add a put spread. So I can add my, let's look at the Keltner channel. So if you open this up a little, what do we see? We see it pulling back towards the 8. This is the 8 period moving average right here. Oh, sorry, that's the 21. So it's pulling back towards the 21. This is where I would want to be doing a funding trade if the indicators were bullish. So you see here, that's not bullish. This is a bearish signal. So I have to be careful because we could land up going past this line and possibly down to this level here. And if it crosses this level while still trending, then I could possibly do it there. So this is just like a heads up. You know, there might be something happening here. Might be an opportunity to go in. And honestly, building a setup like this is not difficult. It's really, really helpful to plan your trades up front, know what you're looking for. When it sends you an alert, you then trade the alert. You don't have to go in to a WhatsApp group and get a tip from your buddy at the gym. I've always worked out that getting tips from people who are covered in towels when they come out of a shower is not a good idea for a trading plan. It's not a good idea. So, you know, be selective, you know, and the thing is, your tools become a filter system. If you can filter your trade ideas through something that's unemotional, doesn't have a bias, and it's still telling you this is a good trade, you have an opportunity to trade. So, you know, it's a really important thing to do. Let's have a look at our Z scalar trade. So here we are. We have a white candle printing this morning. That's a buy signal. There it is. So I'm looking for it to move up a little bit. It needs to just get above that gray line. If it can get above 272, let's open up a shorter duration chart and see what's happening. So 3 minutes. you know, here, a little bit red in the morning, that's okay. But I want it above this red, this yellow box, right? So the key thing for me is as long as the price is above the yellow box, my put spread is going to be making money. And as long as it gets above that trend line, this is a 3-minute chart, so a lot can change in a short period of time. So, you know, that's Z scaler. Let's look at SPX on the open, or let's look at SPY. So you see what happened this morning? We've got an increase in volatility. We had a downward signal for the opening candle. Down the price goes. There was the signal, down. Now it's bouncing. There's my stop level. You'll see the price. Let's move this onto an even shorter time frame. And you'll see the signals actually starting to print. So the 15-second signal. Oops, this one, 15-second. Here. So I don't trade the signals that come off a 15-second chart, but there was our long signal here, scaling in. You can see it starting to move. So, you know, you'll see these candles starting to print in real time, and you'll see things start to change from the colors. I won't trade a 15-minute chart. It doesn't make any sense to me. It's too fast. But if you were an algorithm and a robot and you could trade this fast, this is how they would be doing it, right? They'd be looking for signals. And there you can see a scale in that came off. Momentum starting to shift a little bit different. And as this starts to print, you'll see things starting to change. So let's make it a little faster. 5-second. So there was a 5-second buy over there. There's your sell signal on the short duration there on that green candle. What happened? Price moved down. So these signals are really, really accurate. They're designed to make things a lot easier for you. Here's another one, buy signal. And we'll get a sell signal pretty quickly if price cracks through that line. That's a lower bar with momentum or with volume. And you can also see how this red line is printing. So this red line is becoming like a support and resistance line. Now you can see momentum shifting to the downside. We have a shift here in the histogram. Volatility is coming down. We're still trading off that red signal there. This signal there, you see how price is moving to the downside. Now we've got to wait for a green signal to happen. So it's got to move back up that way. And that's how it works. You literally just sit and watch these things all day and how things print. And the more you practice this, the more you sit and watch these things, the more you see how these signals trigger, the easier it gets. So, you know, I encourage anyone who's wanting to build a robust system, you know, get in touch with me. I will be happy to help whoever wants to learn this. It's very rewarding once you've actually built something that develops consistency, you know, and stops you having to go a little bit you know, crazy. You know,
Absolutely. Well,
this can be quite difficult.
Well, Chris, wish you much luck in the market today. It's hopefully things get a little bit more bullish here soon.
Well, I think we will see something. I mean, look, I'm pretty much neutral. Indexes have opened all negative. But the first 15-20 minutes of each day, really, you know, it's not worth trading. Just stay out of it. Go make a coffee, and then come back at around 10:30. That should
when
work.
The dust settles and everything's yeah,
absolutely. It's good to see you again, my friend. I'm glad you are better.
Thank you.
I will see you next week.
Absolutely. Take care.
All right. Take care, everyone.